Hi everyone, and welcome to Principal's third quarter equity market outlook. For third quarter 2019, we believe that investors should focus on global diversified, defensive portfolios with dividend yield. This will allow investors to shield against the market volatilities that is occurring in the market, especially in an environment where there is a current trade dispute between the US and China. The world economy, according to the World Bank, is expected to expand 2.6% this year, compared with a projection of 2.9% made in January. This is on the back of slower growth and recurrence of trade tension and signs of muted inflation. We project the US economy to grow at 2.2% in 2019, moderating from 2.9% in 2018. The US decision to raise tariffs on Chinese imports has once again clouded the already weak trade outlook. We think this could be temporary because a deal between the US and China is still possible before the year end. However, we will not discount the possibility of a full-blown trade war taking place should negotiations fail. In this slower economic environment, global central banks will be more inclined to cut rates to support growth. For example, the US Federal Reserve has recently shifted the tone of monetary policy from patience to standby for rate cut. European Central Bank has announced the reinstatement of the quantitative easing program from September 2019 to March 2021 to support economic activities. Economic fundamentals in Asia have just started to slow down from a robust first quarter 2019 owing to the trade dispute. We believe Asia's export-oriented economies will need policies to stimulate a revival in domestic consumption. A combination of easier monetary conditions and fiscal spending will be expected. China will continue to rely on a range of stimulus to sustain its economic growth. There has been 2 trillion Renminbi of cuts in taxes, ranging from personal income tax, transportation, and construction. Government has also been issuing 2.15 trillion Renminbi of local government bonds to support infrastructure projects. We continue to expect Malaysia economic growth to moderate in 2019 on softer external demand and government austerity measures. The revival of East Coast Rail Link and Bandar Malaysia projects will provide some catalysts to help stabilise the economy. In Indonesia, the incumbent President Jokowi has secured a second term. The new government will focus on stimulating economic growth. In Thailand, the new government has been formed. The overall economy continues to slow down further while valuation is getting stretched. However, the official election results may improve political sentiment in the short run. In conclusion, we see the overall investment outlook are as follows. Number 1, we see economic growth to moderate further, especially in the developed economies in the second half of 2019. Number 2, global equity markets are likely to remain volatile until clarity is available on the trade negotiations. However, Asia-Pacific equities remain a long-term investment opportunity for long-term investors. To navigate the market volatilities, our recommendation is for clients to hold a defensive global diversified portfolio that focuses on yield and dividend. Our asset allocation strategy is to focus both on equities and fixed income at a 55-45 allocation. This is tactically revised from the 60-40 allocation previously. The revision allows customers to take profit on the strong equity performance over January to April and to allow our customers to preserve their capital.